What's next, FCT? Quite a surprising move. Took me by surprise. Came out of nowhere. But the FCT is gonna buy a partial stake in Next. This is a very popular and well-known shopping mall on the northeast line on the MRT system of Singapore. So what's gonna happen is that it's a JV. So with FCT and its parent FPL. So it's gonna be a JV where FCT has 51% and FPL 49%, and together they're gonna buy 50% of this mall. So effectively, FCT is going to own 51% or 50%, or effectively 25.5% of Next. So the most important thing to me, of course, is the method of financing, because I think this environment is going to be very difficult to raise equity. So quite nicely, the manager has enough debt headroom to finance the acquisition through debt and existing cash resources. But of course, it comes at a price. At the leverage will then go up. Because before this transaction, FCT has probably the lowest, one of the lowest gearing in the S-REIT space at just 33%. But now after the transactions, because they're gonna use debt, therefore it's gonna drop to 38.5%. So well, it's higher, but still comfortably below 40%. I don't think it's gonna get major downgrades in the credit profile. Still quite manageable, I think. The DPU is gonna be 0.5% accretion based on pro forma numbers. But I think with the interest rates higher this year compared to last year, I think there's gonna be a accretion still, I think, but it's probably gonna be lower than 0.5%. Because if you look at what they said, the acquisition is done at the high end of the 4% MPI margin. So if you look at the debt rate right now, I don't think it's gonna be higher than 4.7%, 5%. So I think there's still gonna be accretion, but it's probably gonna be lower than the 0.5% illustrated over here. So NAV wise, it's gonna be the same, so no change. And that's because if you look at the acquisition, right, the property value was 2.78 2.078 billion. So this is the same as the valuation, right? So they are not purchasing this at a discount to valuation. Unlike what happened previously with the Link Trust acquisition of Jurong Point and Thomson Plaza. So they managed to buy that at a discount to the valuation. But over here, they only bought it at valuation, right? So there's no discount. So therefore, there's no growth in the NAV. The entry MPI yield is a high 4%. So I think the best way to look at it is actually the valuations of Junction 8 actually. So if you look at the valuation of Junction 8, which is in Bishan, and this is the extracted from the annual report of CICT. You can see that in December 2021, so not 22, because the numbers are not out yet. J8 was valued at $3133 per square feet of NLA, and over here the valuation is at 3.27 thousand PSF NLA, right? So actually it's quite in line, a bit higher than this guy though. But arguably I would say that the Next is probably better than J8 in terms of attractiveness. So I think it's quite reasonable. Quite interestingly, if you look at the valuation, right? In the CICT's retail mall, Bedok Mall actually has the highest dollar per square feet at 3.5. So it's quite in line, I think, nothing much crazy. So I will also this will also suggest that the NPIU is probably around 4.7%. So if you look at the again the valuations of J8 in the annual report in 2021, 4.7 is the cap rate, right? I don't think the cap rate has moved a lot over the past 1 year. So I would think that the entry NPIU is probably around 4.7%, plus or minus a bit is around there, I think. Of course, this is the previous acquisition of Jurong Point and the Thomson Plaza by Link Trust, and they bought it at a discount of 6.1%, right? Over here, well, there's no discount, it's at full valuation. It's quite interesting though, the Next shopping mall. Remember when the Next first opened, it drew a lot of traffic away from J8, and this was a big matter of concern to the shareholders of CMT back then. The diversion of traffic away from J8. So actually Next has continued to grow actually. If you go to Next and go around, it's really popular. Even during the pandemic, right? COVID-19 period, people are still flocking to Next. Like nobody's really scared of the COVID virus. So this is really popular. You can see this is interchange between the Northeast line and the Circle line. So interchanges will have its benefits. The traffic is going to be quite substantial. The my thoughts about this transaction. Well, actually, the previous video on Link REIT's acquisition of the shopping malls from NTUC, you can see one of the subscribers right mentioned that well, it's a loss to these two REITs. It would be better if they bought it slowly when they have the financial resources. And my reply was that the cost of capital is very high now, so the sponsors can't really buy it as well because their balance sheets are stretched. For especially for the transaction for Jurong Point, which is very very big, right? It's like $2 billion for one mall alone. So over here, the acquisition is a smaller size because you're just buying half of it, and the half of it is split between two parties, right? So you can see that for some subscribers, they actually prefer the REIT to buy the shopping malls because the assets don't come to the market often, which is true. So a bit some guys like it, some guys don't like it, or I'm a bit ambiguous about it. So on the plus side, it's undoubtedly it's a undisputably a good asset, right? Next is a very very popular retail mall. I think the rental reversion is gonna be good. It's going to be stable, so it's definitely a good asset. But on the negative side, this transaction done will give FCT a higher leverage, which is quite a negative thing, right? Amidst this high interest rate environment. But nonetheless, I think there's plenty to come for FCT in terms of acquisitions. So look at the acquisition of Next. After this acquisition, Next is 6% of their NLA, but this is just 25.5%, right? So if they subsequently go and buy everything up, this is going to be very, very substantial. It's even going to overtake Causeway Point in terms of the NLA once they've bought everything fully over time. And after this acquisition, FCT will become the biggest, will hold the biggest share of retail floor space by owner, overtaking CICT, right? But if you combine CICT with CapitaLand, it's still going to be quite substantial. But nonetheless, with this acquisition, FCT is just on the way to being the biggest retail owner, right? Eventually, and this means scale. And I think this scale actually means something because well, when it comes to utility agreements, security guard agreements, water and stuff, well, the bigger you are, the more skill you have, right? And the more bargaining power you have. So there is a certain benefit to having skill in this business, which is very hands-on actually. So I think overall, given that it's not asking for a cash call through equity, because I'm out of cash after all the buying I've done over the past few months, I'm okay with it actually. Small accretion, it's not gonna blow up the balance sheet too much, so not gonna bother me too much, and I look forward to the growth of suburban malls, especially if the work from home team and people all flocking to the shopping malls. You can see over Chinese New Year, the shopping malls all full, man, all packed. So well, I guess I'm quite happy with this acquisition. How about you?